Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So, what are we going to talk about? Well, I want to follow up with the methodology in action, and we're going to do a mystery chart reveal, and we have a new mystery chart, so to speak. Well, the reality is it's the methodology not in action, and that'll make sense in just a few minutes. I want to keep on with these 22 trading resolutions for 2022. I went back and tried to find them all from last year and realized that I got started in, I think, this COVID thing, which nearly killed me, or at least I ended up in ER for a little while. Kind of sidetracked me on that. So I've been using some of these year after year. I realize that. But you know what? I think we all need to hear them every year, and I certainly need to hear them, and I feel like I'm doing a little bit better this year so far, at least, knock on wood, because I'm paying attention to those. Housekeeping. I do take requests. If there's something you want me to cover, please let me know. It makes my job a lot easier. This show is somewhat limited in its format. It has to fit in a slot, so to speak. But the show that I do every Thursday night, God willing at least, you can go to davelandry.com/webinar for more on that. Register even if the date is old, and you'll be registered for all upcoming shows. You can bring your questions to that webinar, and we can discuss them live. If you want the slides from this presentation and all my other presentations combined, along with enough stuff to keep you busy for a long time, get to know me first. Go to davelandry.com/StockCharts. And to reach me for a request or a question, davelandry.com/contact. All right, let's talk about the mystery charts and the methodology in action. So here's our mystery chart reveal. It is HLTH. Nice thrust from lows, kind of a cup and handle looking pattern. It's also something I call the first thrust. I think it was also a bow tie. And if you go in and watch prior shows, you can learn a lot more about those patterns. Anyway, it pulls back a little bit. Entry is here. Stop is down here, just in case we're wrong, right? And we're looking for a profit target, initial profit target at least of right there. And hopefully, as you'll see in a few minutes, we stay with this position for a long, long time. So let's take a look at what happened. Nope. It imploded. And as I talked about in last week's Dave Landry's The Week in Charts, I got a text from a client of mine, and he was upset because he took the trade, even though it didn't trigger, and the next day it imploded. Now, if you are going to front run a setup, let me just get sidetracked here just for a second. Front running means you're getting in a little bit early. If you are going to front run a setup, only do that if conditions are absolutely fantastic. So in this particular case, sans one particular client, which hopefully is not watching, no capital was put into harm's way. And I think that's one of our resolutions this year is wait for an entry. Now let's talk about this week's mystery chart. There it is in all of its splendor. As you can see, great looking setup, right? No. That's actually a joke. There's no mystery chart this week. One thing I was thinking about right before I went live, and this is something I think about every now and then, especially when the market gets choppy like it has been, is you don't need me when things are going great. Although I would like for you to keep me on staff because maybe I could find even better setups, but you could get a little sloppy and your stock selection isn't really super, super duper crucial if the market is blowing and going and everything is just going straight up. However, when things are chopping back and forth like they have been lately, Jackie Mason type of market, it's up, it's down, it's up, it's down. This is a horrible market for the trend follower, and the best thing you could do is just sit on your hands when this occurs. So instead of the methodology in action this week, I want to show you the methodology not in action. And by the way, the worst thing you could do as a trader, well, there's plenty of worse things you could do. We'll get to a few of those. But the worst thing you could do is jump from methodology to methodology to methodology. I've learned that many, many years ago where I was trying to be everything. And truth be told, I'd met up with a trader, and if the market was reversing, he was a reversal trader. If the market was trending, he was a trend trader. And if the market was doing whatever, he was a whatever trader. Well, I quickly learned that he was FOS. And if you try to do those type of things, you end up chasing your own tail. So the best advice I could give you, or some of the best advice I can give you, is to pick one thing that resonates with you, okay, and stick to that one thing. And when conditions aren't fantastic, just back off a little bit and let that market come to you. Like we talked about last week, very hard to be patient, especially if you are very successful in your current or prior career, because hey, you don't make money by doing nothing. And you also have to take whatever train wreck comes along, whatever client train wreck comes along. You don't have the luxury of sitting around and not doing anything for weeks on end. Now, let's get into the 22 trading resolutions for 2022, part 2. Number 7. I will only trade the charts and ignore all other extraneous information. Well, one extraneous information example would be news. And news is noise. But Dave, doesn't the news move the market? Well, yeah, it moves the market, but quite often it's just the opposite of what you might think. And number 2 is, did you get the news right? And I was looking at some of these old presentations that I use the example of Donald Trump winning the election and Brexit. Many people got that wrong. And even if you got those things right, if memory serves on Brexit, but definitely on the presidential election, the market did just the opposite of what you think it should do. So I often say, read my lips. I ignore all news. But Dave, what about the earnings? I ignore all news. But Dave, what about the situation in Nigeria? That's classic Dave Landry. Let me see if I can tell the story real quick. I was speaking at Traders Expo once. I was talking about oil being bearish, and it showed 5 or 6 oil stocks. I like to show potential open trades or setups, open trades, and just whatever I can that's current or still on. And I showed a bunch of oil stocks, about 5 of them, if memory serves, that were all headed lower, and I believe that they were going to continue to head lower. And fortunately, they did. But anyway, somebody blurted out, "What about the situation in Nigeria?" And he sounded kind of like Henry Kissinger, and I'm like, what about the situation in Nigeria? In all of those stocks, doesn't always happen this way, believe me. If it did, you'd never see my fat horse again. But all of those stocks continue to trend lower in spite of the situation in Nigeria. One of my favorite sayings, and I used to have the domain. I don't know if I still have it. I had a domain fetish a few years ago where I bought up every domain I could think of. Anyway, it's don't confuse the issue with facts. And this could go for a variety of things. Of course, news, as we just touched upon, or you might say, oh, this company is just a great company, and it's doing all these great things and wonderful things. But if it's not trending, or if it's trending in the opposite direction, in other words, if it's going down and you think it's a fantastic company, then the best thing you can do is just leave it alone. I've talked about that many a times. One particular example, and I think I showed it in these presentations, at least this show, going back over a few years ago, a buddy of mine just kept buying and buying and buying a stock as it continued to go down because he believed in the company, he believed in the CEO. Well, those things might be true, but if the market doesn't vindicate what you're thinking, then you cannot confuse the issue with facts. Number 8, I will place a protective stop after a trade triggers. Now, nobody knows exactly what a market will do. Not you, not me, and certainly not the guy on TV. So you have to put a stop on every trade. So here's one from last year. It was in a really, really nice trend. It forms a TKO. Go in and watch prior shows for more on that. Entry was here. Stop was down here, just in case it doesn't work out. And fortunately, at least it worked out a little bit in our favor, enough for us to get that initial profit target off of the trade. We bring the stop up to break even, and if memory serves, it had a little bit of a gap, and we did a little bit worse than break even on the remainder. And as you can see, this thing began to implode, and it's lost over half of its value since we got in. Now, without taking partial profits, which is one of our resolutions. And without a stop, this profitable trade would have ended up as a loss overall. And as I've said 1,000 times, I'll get emails, Dave, what about that turd you recommended in Mesa or whatever? I'm like, I would never recommend that stock. That thing's gone down for the last year. Well, yes, you did. You recommended it a year ago. It's like, okay, well, it stopped out 9 months ago. Number 9, I will take partial profits when offered. Now, sometimes you get what I call the better than a poke in the eye trade. It triggers an entry, okay? Your stop is down here. Initial profit target is up here. It hits initial profit target, feeling pretty good. You bring that stop up to break even on the remainder, and you're going to ride it out for a long, long, long time. And I'll show you a couple of those in just one second. Very important to take those partial profits in case it comes back in. And that's what I call the better than a poke in the eye trade. And my view of the market, the way I approach things is you chip away at it, make a little, lose a little, make a little, lose a little. Kind of just keep your head above the water best you can, and then bam, you knock it out the park on one or two, and that's enough to make you a year. And sometimes you catch more than one or two, and that's really nice. So getting back to our prior example, as I said, without a stop in place and without taking partial profits, this trade would have failed absolutely miserably. Take a look at this. We're looking for 1% on the first loaf, and then hopefully, and I know you should never use the word hope, but that's what the stop is for, and following the trading plan. But hopefully, we stay with the position for a long, long time. But in this case, it failed miserably, and we still made about $1,000 on the first loaf, on half of the shares, and on the remaining shares, as I said a second ago, thanks to an opening gap, we lost a little bit on that. But overall, it's better than a poke in the eye. And if you can make 1% on every trade, that turns out to be mediocre, right? And occasionally knock one out the park, you'll do really, really well. Unfortunately, we do have some outright losses every now and then. Number 10, I will not take any unnecessary action, thereby micromanaging myself out of trades. I often talk about dead money and trying to outsmart the market. And the reason I have the little house in here is sometimes you might look at those profits and think, you know what, I better grab those profits before they evaporate. But if you just follow the plan, not all the time, but over time, you might catch that longer term big winner and make it all worthwhile. Micromanagement, when you end up with dead money, so-called dead money means that the position has little or no chance of any further appreciation. Well, how do you know that, okay? You don't know that that's all the market is going to give you. And as trend followers, we take kind of a dumb approach and we let that market take us out of the position. But in the meantime, we just sit tight. So don't try to outsmart the market through micromanaging. Now, here's the thing, and as I preach over and over again, the market is a very, very bad teacher. Micromanagement usually pays or often pays over the short term, but it never pays longer term. And if you miss those few outliers that occur every now and then, you're never going to really get anywhere as far as growing your account. So here's one we put on last year and was still in it. This is the open portfolio. With all the zigs and zags, we did get knocked out of a few things, but we still have a couple on that are still doing okay longer term. We had a nice little thrust from lows, nice little pullback. This was an IPO. Entry was here. Initial profit target was here. We trail that stop higher. And then so far, knock on wood, we've ridden out quite a few corrections. And we've been in this stock for a long, long time. This is an open position. Now, notice all the zigs and zags and sitting around that you'd have to do during this entire time frame. And I guarantee you, a lot of people gave up on this trade a long time ago. In fact, sometimes and often I'll see people will give up way back here, even though it's moved in their favor. As soon as it begins to come back in a little bit, they'll micromanage themselves out, thereby missing a very, very big winning trade. Here's the other one in the open portfolio, ARLP. You can see nice thrust from lows, nice little pullback in here. Initial profit target was here. Stop was down here. We trailed it higher. And knock on wood, we've been in this thing for a long, long time, going all the way back to 2020. And then you can see that it died out for a long time. Worked its way higher, then died out again. Had some really deep retraces in it, but so far, so good. And believe me, it's not easy. ASO's one we were in forever. It finally stopped out. And in the end, it ends badly, okay? But I'd much rather make several 100% on a trade and give up a little bit in the end than to not make anything at all by micromanaging myself out of the trade. Now, I'm not saying throw caution to the wind, but as long as you're not stopped out, stick with the position. Number 11, I will seek excitement and entertainment outside of the market. I know we all seek action. Like I talked about last week, the reason it's hard to sit around, again, not to beat the dead horse, but the reason it's so hard to sit around and wait for that perfect pitch is because we have been trained our whole lives not to do that. I talked about my doctor friend last week, who's also a client, who was presented with this grotesque leg he had to deal with. If he began to operate on it, he could kill the woman from, I guess, sepsis or whatever. If he didn't do anything, then she would die. Okay? So you couldn't sit around for somebody to come in with a leg that was okay or not too bad, right? Now, the thing I learned about excitement early on was way back when the earth was still cooling. I was with a website called Trade Hard, and then that became Trading Markets. And at some point, it was kind of all by accident, a coincidence of circumstances or whatever. I ended up with the trading service, which I'm still doing today. I just talked about. Anyway, back then there were peoples, and if I didn't recommend any setups, like right now, I'm not recommending anything, okay? Spoiler alert. I'm not recommending anything, right? We would lose clients, and the salespeople would call me up and literally beg me to show some recommendations. And I'm like, no, I'm not going to do anything. I don't think that my clients should be doing anything. The irony of all that was when I had bad performance, as I occasionally do, it happens, okay? Spelled with a silent, what is it? It spelled with a silent SH, right? Happens. But when I had poor performance, my sales numbers really didn't go down that much. And that's because people craved action. So as I often preach, if you do want some excitement, go to Vegas or have an affair. That way you only lose half of your money. Now, as I often preach, busy people make good traders. Here's a story I've told 1,000 times. I had a client, in fact, it's the aforementioned doctor, and he does tend to fire off a lot of day trades. He's actually pretty good at it. But I do think he has an issue where he occasionally trades for excitement. And then out of the blue, he said, my trading recently got a lot better. I'm like, oh, what are you being more selective? You're listening to what Big Dave says and not always what Big Dave does. Like, what is it? I was dying to know. And he says, well, the doctor that was taking care of my hospital patients quit. So now I'm literally working day and night. He'd go in and do his practice in the morning and afternoon, and then evenings and nights he'd end up in the hospital. And between all that going on, he didn't have time to do a lot of recreational trading. He also stopped micromanaging, and he just let the positions go. And all of a sudden, it was a big epiphany for him because he was able to ride out some of those aforementioned dead money periods for a long, long, long time and did much, much, much better. And his answer was, I'm here dusk to dawn. I'm not trading like a crazy man. One thing you have to watch for is the more you observe, the more unnecessary action that you will take and the more likely you will put yourself into a state of regret. And that's even on winning positions. You have to be as close to the market as you need to be, but no closer. Now, I could be a little philosophical today. I do preach in general against day trading, but I'm here anyway, and I do fire off. I like to call it intraday trades. I get in as early as possible and hold on as long as possible. And today, knock on wood, I'm having an okay day. And I told myself today, I'm not going to sit there and watch that stupid screen all day long, the flickering ticks, right? And be drawn in like a moth. I'm going to work on this presentation. I'm going to get this presentation out. I'm going to look at some other markets such as crypto and do a few other things, and kept myself busy. I know if I look at every little tick, I'm going to fire off a lot of unnecessary trades and also get shaken out of a lot of trades. As I've said many a times, a while back, I was trading some E-minis and I was using a 5-minute chart. And by accident, one day I changed my chart to a 15-minute chart. And I was getting chewed up, and I'd make a little, lose a little, make a little, lose a little, and it was kind of an exercise of futility. And then all of a sudden, I went a whole day without a trade. And I'm like, well, that's odd. That hadn't happened in 2-3 weeks. And the next day, I went a whole day without a trade. I was like, wow, that's strange again, because this market's just kind of chopping back and forth. And the third day, I took a trade, and I did really, really well. And I'm like, what the hell's going on? And then I realized that I'd accidentally changed from a 5-minute chart to a 15-minute chart. And just that one thing in and of itself had me doing way less trading and a lot more profitable trading. So be as close to the market as you need to be, but no closer. I have a rule: if I ever find myself on a 5-minute chart, or God forbid a 1-minute chart, something is really, really wrong. Now, backing up to the core methodology, which is my bread and butter, I try not to watch, try be the keyword in that sentence, I know, but I try not to watch every tick so much, and I try not to watch an intraday chart. And the best thing that I can do, especially if I'm getting into a new position, is keep my charts on a daily chart. If I'm getting into a position trade on a daily chart, and hopefully be there for a long, long time, like those two I just showed you, what I'm doing is I'm watching that daily chart, and I'll just put the entry in and often just go about my life. I get stopped into it, I get stopped into it. But I guarantee you, if I'm sitting there watching it like that mystery chart I talked about a little while ago, HLTH, I'm going to be very inclined to jump in long before it triggers. So I would encourage you to be as close to the market as you need to be, but no closer. Number 12, I will accept what the market is willing to give. If you are successful enough to have some money to trade, you probably made that money by having a high degree of control. The way you become successful in life and a career is to have a lot of control over the situation. You're not doing things in a very haphazard sort of manner. So the real world has trained you very poorly for the trading world. In fact, this whole presentations I've done just on that. The bottom line is you have no control over the market. Now, this can go a couple of ways with I will accept what the market is willing to give, or maybe I will accept the market is not willing to give, okay? Sometimes you might have a small profit and you're going to stop out at that small profit. And it's better than a poke in the eye trade like we talked about earlier, but you might think, you know what, I'm just going to let this thing go because I'm kind of insulted that the market's only going to give me that small amount. Well, the other thing is sometimes you might have a loss and you have to take that loss. And reminds me of when my children were younger and we got together with my brother-in-law, sister-in-law, and those guys, and she used to say to the kids, you get what you get and you don't throw a fit. You also have to pray the serenity prayer, which is, God grant me the serenity to accept the things I cannot change, the courage to change the things I can, and the wisdom to know the difference. You have to be very careful not to trade the pearls before swine prayer, which goes something like this. God grant me the courage to change the things that I cannot accept, serenity to accept the things I've changed, and the wisdom to know I'm different. Well, that's my time this week. We're going to pick up on this next week. If you need some follow-up information, DaveLandry.com/StockCharts. If you need to reach me, DaveLandry.com/contact. Again, I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.